Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome to the show Monick Halm. Monick is the founder of Real Estate Investor Goddesses. She is an educator and advocate for female real estate investors and has a mission to help 1 million women achieve financial freedom through real estate. Monick is herself a real estate investor and syndicator and owns, together with her investors, over 1,300 rental units across 6 states. She is also a #1 best-selling author, podcast host, real estate strategy mentor, wife, and mother of 3 amazing kids. Hey, Monick, welcome to the show.
Thanks for having me. I'm so happy to be here.
Yeah, I'm really happy you're here too. Could you tell us a little bit about your story?
Sure. So my story in real estate investing was completely by accident. I grew up, I'm the first generation American. My parents are from Haiti, and they always told me, like, you can do anything you want, in parentheses, as long as you're a doctor, lawyer, professor, engineer.
I can relate to that.
I bet you can. So I was not as into math and sciences. So I was like, okay, I'll be a lawyer. And went to law school. And then I was in a big firm. And the only thing that they ever taught me was, with regards to real estate, was buy your own home, right? Buy a house. So I was like, get a job, buy a house, put money in retirement, work till 65, get a gold watch, go for a few years, die. Right? Like that was yeah, right?
Oh dear.
That's happiness and success. I was miserable as a lawyer, but that's a whole other conversation. But it was a few miserable years as a lawyer, and well, okay, I guess it's time now to buy a house. And even though I had a 6-figure income, I lived in Los Angeles. You're in San Jose, so you understand like expensive market values. And this was in 2005, towards the top of the last bubble. But a modest house in a modest neighborhood. I'm not talking about a mansion in Beverly Hills or Bel Air. Just like modest house in a neighborhood where you're not going to have drive-by shootings. Was like upwards of like $600,000-$700,000, and I couldn't do that by myself. But a friend of mine who was in a similar boat suggested that we buy a duplex together. He would live on one side, I'd live on the other. And I was like, I could buy half a house. So yeah, let's do that. But instead of finding a house with 2 equal sides, we ended up finding this old Craftsman, this 2015 Craftsman, beautiful property that had a larger unit downstairs, a 2-bedroom unit upstairs. There was a converted garage in the back. And so we each, instead of each taking a unit, we each took a bedroom in the larger unit. We rented out the upstairs, we rented out the back house, we even rented out our basement. And we were house hacking before I knew that was a thing.
I know.
Like, this is awesome. People are
Yeah.
paying my mortgage. How great. I still didn't think of it as something to, I just thought of it as like free housing, but I wasn't really thinking about it as a way to escape law, which I should have because I was super miserable. But when I met my husband, he had a duplex. Now we got a single family together. It was LA, barely cash flowed, but so we had it. And then at the time I didn't realize that you could invest out of state. I just thought you had to invest where you lived, right? So
I can relate to that too.
Yeah. Then 2008 happened. Actually, before that, so we got married in 2007, and I was pregnant, and I got pregnant. And when I was about close to 6 months pregnant, my boss at the law firm I was working at called me in, and I was, I thought, okay, it's like I'm gonna get a bonus. I'm working really hard, but instead of getting a bonus, I got fired, which was completely shocking and terrible. And it was like that week that I got fired was the week that I'd gone from looking fat to looking pregnant. Like I was like, like I
Oh
was never
man.
like that. My sister-in-law was pregnant at the same time. She had this cute like baby bump from the get-go. I just looked fat until like, and then I'd just gotten that bump and I was so excited, except until I got fired. I was like, ooh, like how am I gonna get another job? Like I look so pregnant right now.
Yeah.
And so I thought, okay, forget it. I'm not going to look for a job. I'm just going to, wait until I give birth, have a short maternity period, and then I will, and then I'll find another job. And so my baby was born in late August of 2008, and then within a month, the market was in free fall. It's giving me a lot of I'm having flashbacks like right now, like
I
what it was like
know.
then, and I'm so grateful. I'm in such a different place than I was at that time. But so I lost my so I didn't have my job, and then my husband, who is a self-employed graphic designer and works in the music industry, his business went down like 90% at the same
Wow.
time. So it was really tough. Our real estate helped sustain us, kept a roof over our head. We were still really a struggle, but we were able to sell one property and we started to flip when houses were on sale.
Hmm.
And we then we started after until we flipped until about 2015,
Hmm.
and they were not quite as on sale. It was really competitive, and flipping is a job. You get the house and hopefully you make a profit. Knock on wood, we always made a profit, but then you have to start all over again.
Yeah.
And I thought I'd rather have something that's a little more passive. And I started looking for a fourplex in LA. Um, and it was so expensive. Nothing cash flowed, made no sense. I was super frustrated because it was like hard to flip and it was hard to, it was like, and at that point, like we were pretty much doing real estate full time. Um, and, and then at that moment, I met a mentor. Robert Helms is the host of the Real Estate Guys radio podcast. I met him through a mutual friend. Said, "Oh, you should meet my friend Robert. He's done like hundreds of millions of dollars worth of real estate. He's going to be in LA tomorrow. You should come meet him and maybe he can give you some advice." So I go meet Robert, and he tells me, I tell him about the flipping and the fourplex, and he goes, "Oh yeah," he goes, "I always say, LA's a tough market. I always say, live where you want to live, invest where the numbers make sense."
Hmm.
Yeah, and when you're nodding, and I was just like, I until he said that, I had never thought of that. So I always like I just hadn't like occurred to me that was a possibility. It was just like, what? Like, and that literally opened up the whole world to me. Um, and then the next thing he said was, "Oh, and you can buy this fourplex by yourself, but you're limited to your own capital and credit." He said, "Alternatively, you could buy a 100 or two, bring a group of investors together and buy a 100, 200 unit apartment building." And he started telling me about the benefits of that. And you could share the wealth and the risk, and you can go much further faster. And I was like, mind blown. What? Like,
Uh-huh.
I want to do that. I want to do that. I didn't realize. I would have at that point. I thought you needed Donald Trump's bank account to do that stuff. I had no idea like that was a possibility at all. And I also realized that, ooh, I want to be around people who think 200 units is normal, because like up until then, everyone around me thought fourplex was like a really big deal. Um, and so I went to learn how to do this thing called syndication, which is bringing groups of investors together. And we started in 2016. And in that first year, we went from having our 2 units to over 1,000 by doing syndications. And we've since like sold some and bought more, but uh, it's been incredible
Mm.
and a really fun journey. So that's my that's my story.
Nice. Oh my gosh, that is so fascinating. So I haven't actually had anybody on the show that does their own well, I guess they do their own syndications. Um, yeah, I've had one other person. So I'm really interested to hear a little bit more about sort of how you bring your investors together and kind of what a syndication looks like in your world.
Sure. Well, So when I went to that first conference,
Hmm.
so Robert Helms, his partner Russell Gray, they do a conference called Secrets of Successful Syndication, and he told me about it. So I met him October of 2015 in LA, and he's like, "Okay, we're doing this thing. It's be in January 2016, Phoenix." So I went home that night, told my husband, "We're gonna do this. We're gonna learn how to do it." So we bought tickets that night. And when I went there, they were talking about, when you're building a syndication and you're bringing, like, to get investors, you have to build a brand, build a network. So that's really like important. Build a brand, build your network. Think about who do you want to work with? Who do you want to work with? And so that was a Friday and Saturday conference. And so Sunday morning, I'm in the hotel gym and I'm on the elliptical and I'm going through my head just like what they talked about and who I want to work with, building a brand, building a network. And in between being a lawyer full time and, while I was doing the real estate, I became a life coach and so I became an abundance coach for women. So I was already coaching women around money and abundance. And, it's something that I was sort of started to move away from because I was focusing more and more on the real estate. But I had that, I already had that thing with women and money, and I'm thinking like, who do I want to work with? And then I started thinking about that room that I'd been in, that conference, and in a room of 120 people, I think maybe 9 of us were women. It was like much less than 10%.
Yeah.
And
And that's
and,
typical.
and that's very typical.
Yeah.
And I think there were maybe 15 speakers on their stage, rather like one woman,
Hmm.
something like that. So it was just like there were no women. And then like all of a sudden it hit me. I was like, there are no women in that room. I want to work with women. I need to bring women. So it became like women. This is who I want to work with. And I'd studied the divine feminine for a long time, and I've been like in groups of women. So I was like, it came as this divine download. Like, oof, that's what I meant to do. And so as we set out to start our syndication business, we started working with investors that we'd meet at different conferences, but I was really, really focused on like, how do I invite women into this real estate game, knowing that like, I'm working with women around money and wealth and abundance. And I was like, this is the best way, in my opinion, that you're going to build wealth. Like 90% of millionaires get to be so through real estate.
That's right.
And I'm like, and nobody's talking to women about this. Now you are, but
We both are, right? It's funny.
My soul sister in this, but I was Googling. I was like, there's nobody doing this. And still like there are, there are more of us women talking to women about real estate. There's still far too few of us.
Yes, I'm with you.
For like the 50% of the population that we are, there's not enough. Still, we need more voices, inviting women into this game, and because it's like we have this abundant world, but women aren't told or taught that this is an option for them, that this is something they can do, and they're often not seeing people that look like them. If you go to like your typical conference, it's all men. It's mostly they're like old white men. That's like they're like gray hair
It's
is up
so
there,
true, right? You're
and
like,
it's like
I don't belong here. Yeah.
yeah, it's like I felt like a unicorn. I was so different from everybody in the room. And in certain ways that worked for me. I was very memorable, and that was like that served me. But I just like this needs to change. So but focusing on women has been one of the main ways in which we have been able to grow our investor list. And and at first, most of our investors were men. So we started like our first few deals was like probably like 90% were men. And now it's like opposite numbers. So we're probably like 90% women investors, which makes me happy. And so, I just like partly it's like letting them know that it's out there, and that this is, there are these passive investing opportunities for people that are often at least as abundant, and because least as high at ROI as a lot of the deals that you do yourself. Our passive investors are making way higher returns than I was making with my properties in LA, or Properties where I was doing all the work. So it's just like letting people know that this exists and that it's possible. And then I don't know, you had another question, like more specifically about how.
So what do your syndications look like? Like like what
Like,
properties you offer
how do
and
they
that sort
work?
of thing. Yeah,
Yeah.
how do they work?
Yeah. So we get larger commercial projects, really typical ones. Say we'll do a B class commercial apartment building. So one project, our second to last project that we did was 250 units in Atlanta. B class, a suburb of Atlanta. Um, Nice building, and we got bank financing for 75%, and then we raised money with investors for 25% of the like the down payment, plus some capital expenditure funds and cash reserves. So that was that was a pretty big deal. We were
Mhm.
raising 8 million for
Yeah.
that one. So what we do is we buy these value add properties, and so it's still a really nice building, but the units they could have been upgraded. The rents were a little bit below market to its neighbors. So there was and the property management could have been improved. So we brought in new property management. We started improving the units and increasing rents. Now, we closed on that one in when did we close on that one? Like October, and it was going super well. Things are a little different right now. Like right now, the focus has gone from like increasing the net operating income to keeping the net operating income stable. Which is, so it's more, we're not like trying to fix up units and raise rents right now. We're more like, let's keep our tenants in place. Let's get them to re-extend their lease. We're not raising any rents. We're keeping prices where they are. Let's just like, we're serving our tenants, helping them stay healthy. If anybody loses a job, helping them find unemployment and get so we're working to keep our keep the cash flow. Like, we buy properties that are cash flowing from day one, so it's already cash flowing. But this the plan to like raise rents and increase the net operating income, that's on pause.
Yeah,
Now it's like
exactly.
very different. Now it's like loss mitigation.
Yeah.
Yeah. So, but how it works though is that as we cash flow, we give distributions to our investors. They're getting them every month. The monthly or quarterly, they'll get distributions of the profit, and then when we raise the net operating income, we sell the property, we share, the investors get a share of the equity raise.
So and do you manage that whole thing, or are you a partner with somebody else that manages that whole thing?
I'm partnered with people that so we've done some where we've done all of it. So now and then as I've gone, I've realized, like, what do I love to do and what do I not love doing as much. So what I love doing more is being on the investor side. I love talking to people. I love getting them to different opportunities. And I'm not as into, and so what we do is we vet deal. We have certain partners that we work a lot with, and that are just have decades of experience, and we know, love, and trust them. And then they'll bring different opportunities to us, and if that makes sense for our investor groups, then we'll partner with them. We'll bring the money. We're part of the team that's managing, but we're not as involved in the day-to-day management.
Got it. Got
Yeah.
it. So you mentioned that the strategy has changed a little bit, right? You've gone from increasing rents to mitigating loss.
Yeah. So like,
which
let's
is
keep the NOI the same.
exactly.
If we can keep the NOI from going down, we're like, this is a win
Yeah.
right now.
But that's a perfect segue to this next piece that I wanted to talk to you about. You just had a summit. So I had a summit 2 weeks ago, and you're just having a summit like
I'm in
right
the middle
now,
of it.
right?
Yeah.
And
Yeah.
the conversation is about asset classes that are like economy resistant or economy stable,
Recession
right?
resistant. Yeah.
That's right. So not economy resistant, but yeah, it's the end of the day. But anyway, so could you talk to me a little bit about what those asset classes are and kind of what that looks like?
Yeah. So some of the recession resistant asset classes that exist right now are, so I still really think that B class apartments are a recession resistant investment because
Mhm.
you have, I mean, it's one thing if the whole economy stops and nobody's working at all, but like that doesn't normally happen, and that's not going to happen long term. So normally, it's not like full stop on the economy. So most things are not going to do very well in this type of environment. But generally, and it hasn't been as bad because a lot of our tenants they're more white collar, they're more able to work from home. So it hasn't been the bloodbath we feared. April was okay. Well, as it progresses, that may, like, people's ability to pay rent may go down. But generally speaking, in strong metro areas where we invest, where there's like it's a diverse economy, you have different industries and corporations. Like Atlanta's not going to totally go under. Like they have so many different corporations, from like Coca-Cola to CNN and the largest airport in the world. And eventually the planes will fly again and people will drink cokes, and like there's enough like diversity and like strong but businesses there. Like Atlanta's not going to just you know end, right, as a city. So there's always that need for middle class housing as people lose, they might lose their homes. What are they going to do? They're going to move into apartments. Baby boomers have been, like, traditionally they've been downsizing from their houses to the apartments. um, Millennials who weren't able to buy homes, it was too expensive, the prices might go down, they might be able to buy, but people are skittish about buying, they're going to be in apartments. So in like most like strong markets, there's always that need for that like level of housing. So that I think that's a smart bet. Mobile homes, I think, are really poised to do very well as well. There's super low income housing, right? People can buy mobile homes for like 30,000, like quite a bit in the same area, like a stick built house, right? It's going to often be like 5-10 times more than a mobile home would be. So people can live in mobile homes. They pay a lot fee. They can buy their home for very little, and so you can invest and like buy them and sell mobile homes. Or we have a mobile home park. So you basically own the land. They pay you a lot fee to have their home on the land, but there's pride of ownership because they own their homes. And it's super low income, so I mean low cost point, so that there's a very growing need for that. Tax liens and are going to be, I mean, there are always people that can't pay their property taxes, and people sell tax liens. There's probably going to be more tax liens, not less, I would imagine, in the coming in the coming days and years. So, but there's always a need for tax liens. Another super interesting asset class that most people don't think about, and I interviewed a woman on the summit today who does that, is land investing. So
Mhm.
she buys land and sells it, mostly like seller financing. Um, she's like cash flowing the seller financing on her land. Like she makes 70,000 a month selling
Wow.
land. And so you can often get it pennies on the dollar, just do a different strategy. So land investing, I think there's going to be a lot of, if you, with strategies that she teaches, you could do that. Other things that I think have the capacity, I think assisted living or senior housing, because of the demographics, is a silver tsunami. So you have 10,000 people a day turning 65. The boomers are just like getting into this. And actually we have like a good like 15-20 years of this boomer generation, and there's not enough demand, not enough
Supply.
supply already today for this for those that are coming, and it's just going to be even more like every day. So huge opportunity in assisted living facilities, senior housing. Um, other things that have a lot of potential. So right now we just bought a deal that we just closed on this past week was a cold storage facility. Is an industrial project, cold storage facility for a frozen food manufacturer. What we're looking at right now, and we have a few similar projects, but that are like essential businesses and industrial, not so much office and retail. I don't know how they're going to do, but there's a lot of demand for different types of industrial space. And so that is an asset class that we're looking for, but it's really like, it's going to depend on who the users are in terms of how well that does. Let's see, trying to think, was there more? Like, who else did I have? It's also the end of my day. I'm like, I feel like there were more people, but I can't, like, who else is talking? Yeah, mobile homes, tax liens, land, multifamily. Oh, Section 8 housing. Section 8 housing is, government subsidized housing. Right now, we have some Section 8 Section 8 portfolio in Jackson, Mississippi. Or like that. Those are like the properties where like we know we're getting paid on those. And everywhere else we're like, oh, I don't know, are we gonna get paid this month? I don't know. But we're like, oh, like the Section 8, that's good. That's good to go. So I think Section 8, any like low, like low income housing, but it has to be like the C class apartments. If it's not Section 8, that's a pretty fragile group. Like a lot of them are hourly, a lot of them, those are the ones that are unemployed and lost their job. So that's a little more fragile than the B class. But if it's Section 8, then I think that's a good market to look into. So,
Interesting.
yeah.
Very cool. So, so I know that there's a lot of details around all of those things, and I know that people will want to hear more. So, why don't you tell everybody how they can get in touch with you and find out a little bit more about the summit? By the time everybody is listening to this, the summit will have passed, but can they still get access to it later, or how does that work?
Yeah, they'll be able to get the replay. They'll be able to purchase that.
Okay.
You can find me at reigoddesses.com and at reigoddesses mostly on social, so Instagram, Twitter, Facebook. Look at REI Goddesses and you'll find me. But the website's probably the best place to head.
Nice. And I like that she says it's goddesses because she wants all of us to be the goddesses. She's not the only real estate goddess out there.
Not the only goddess. They're all goddesses.
Exactly.
Drop the divine. And so, yeah, so it's, you're all my goddess.
I am so with you on that. I love that. And I know you have a free gift for my ladies. Could you tell us a little bit about that?
Yeah, so I have a real estate investor success blueprint guide that I've created, and it's 7 steps to take to successfully invest. And these steps are foundational principles that you can use that will help you to be successful in any economic environment. They're just like, this is the basics of real estate investing.
Nice. I love that. And the link for that will be in the show notes, ladies. It's really long. So I'm not going to read it here, but it'll be in the show notes. So We'll have that for you there so you can take a look there. And then Monick, I really want to dive a little bit deeper into sort of the passive investing model. So we're going to do that in extra. And so ladies, what we're going to talk about is how to create passive income with recession-proof assets.
Recession resistant.
I know exactly. Yeah. That's true. And that's such a really, really good point, right? There is no such thing as you can't lose any money ever. I mean, real estate is like any other investment. it has its cycles, it has its ups and downs, and it has its risk. The thing is that you can make different decisions to help to protect yourself, right? So there are higher risk that could have higher return, but are more likely to be susceptible and vulnerable to economic change. And then there are assets, and this is true in everything, right? If you're looking at real estate, if you're looking at stocks and bonds, whatever it is that you're looking at, there are going to be assets that are going to be more recession resistant. So
but it's not, I don't want to say that it's like high return equals high risk. So there's some of these recession resistant investments or asset classes are quite high return. They're not necessarily high risk. A lot of them are higher return because they're just not as sexy, and there are not as many people chasing after those returns. So, or chasing after those asset classes. So you still have there's a lot of, you can still have a lot, like high return, but it's the characteristics of those asset classes makes it so that even when economy's down, oh, I remember the last one. Self-storage. I forgot. Self-storage. It's also a really good asset resistant, recession resistant asset class. God, is it late?
Okay, awesome. Yeah, I've been hearing a lot about that. And actually, based on what you just said, Extra just got that much more interesting, right? You've got recession-resistant passive income asset opportunities that actually still have really high returns. I want to hear all about that. So we're going to hear about that in Extra. But for now, just thank you so much, ladies, for joining Monique and I for this portion of the show. And Monique, thank you so much for sharing everything that you've shared so far.
Thanks for having me. It's been a pleasure.
Yeah. So nice to finally chat. Like, we are two voices and sort of out there kind of floating in the wind, I feel like. And so I've been so eager to meet you. So this has been fantastic. Thank you.
Thank you.
Yeah. And ladies, so stay tuned for Extra if you're already a subscriber. And if you're not a subscriber but would like to be, go to realestateinvestingforwomenextra.com. That's realestateinvestingforwomenextra.com. And when you go there, you'll notice that you get 7 days for free. So I just looked at it. I've got like 35 to 50 episodes up there. And so you can binge on a ton of those, get as much information as you like, and then you can decide if you want to be a member or not, right? You got 7 days to check it out. So definitely go over there and take a look. It's realestateinvestingforwomenextra.com. For those of you who are leaving us now, thank you so much for joining Monique and I for this conversation. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you next time. Bye. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.